This one candle rule is going to make trading so simple that it actually feels like cheating, and if somebody told me this when I was starting out, I would have just became profitable a lot sooner. So let's just get into it. And also, just before we get into it, here is the results that I actually got with using this rule. So this was the last month and this is this month currently, which I'm pretty sure I'm gonna come to $20,000 in a single month. Also right here, if you want to go down there to the description, you can see my other channel where I upload literally every single live trade I take in the market. You can see me taking it in live time, also my losses, my wins, everything. So now that we got that out of the way, let's actually get into it. But first, I'm gonna ask you a question. Why does it take so many years to become profitable? And the simple question is that just a lot of people don't know where to start and what to do and how to trade, and that's the biggest problem because they don't have simple rules laid out. And I know this because it personally took me 3 years to actually become consistently profitable, and if I knew this, which was just a set of simple rules, it would just take me 1 year. So whatever strategy you're trading, it's always gonna be just a bunch of different rules, a bunch of different confluences, and it's just gonna be a lot of mess on the chart. And trust me, when you have so much of these different stuff on the chart, it's just going to be so hard to actually get on the chart and actually do it in the live markets. So right now I'm gonna simplify it all, so let's get into it. Okay, so the step number 1 on the actual chart is going to be us coming there and us just seeing where the market is headed. So that's gonna be the step number 1, and you can clearly see right here that the blue candles right here, which are to the upside, bullish candles, are just much more powerful than these gray candles right here trying to make some kind of pullback or reversal. So you can see that market is clearly heading to the upside right here. So that's our first step done. We know that market is heading to the upside. So that means down the line we are just gonna look for longs or buy positions. The next thing that we want to do is identify these fair value gaps in these pushes. So what a fair value gap is, it is just a imbalance in the market, and it is just this hole in the market right here. As you can see, we also have the second one right here, but right now I'm gonna come to the part why this one down here is way more important than this one up here. So now the second step is going to be us to identify all the pullbacks in the market. So here we had a bullish push to the upside. After that, basically there was no longer buyers in the market and market started selling off for a bit, and then after that market's buyers again kicked into the market and pushed the market to the upside. And what did that do? That had basically let us know that a lot of buyers kicked in right here, and that means that a lot of sell orders are going to be down here below this wick. So a lot of people who enter buy orders right here are going to put their stop losses right here below the recent low, and that means for us that we are going to mark that low, because when the market takes out that low, it is going to stop all the people out who entered long positions off of this retest right here. And that's literally it for right now. All we are waiting for right now is actually to market do this and come down there and basically take it and basically sweep this liquidity right here and tap into the fair value gap that we previously drew. And that's all the steps you need to know. That the market is right now finally ready to go to the upside. So the next step that we are going to do is going to be on the actual chart, because I'm going to show you how to spot all of this, and then I'm going to show you how to actually enter the market. So what I'm going to show you at the chart is first going to be swing trades. So I'm going to go based off of the 1 hour and 4 hour time frame, and then after that I'm going to actually show you how to scalp this strategy. So let's just get into it. So the time frames you are going to be using for the swing trades, which are basically going to be off of the 1 hour time frame and 4 hour time frame. So let me show you how we are going to do that. So let's enter the higher time frame first, because we always go from the higher time frame to the lower time frame. And if we look right now in the market, the first thing that we can spot is the step number 1, which is this huge push to the upside. That's what we talked about. Then after that we can spot some kind of retracement right here, which is of course the step number 2 that we talked about, that we are going to mark as our liquidity that is actually already swept. So right now if we have the confluence that we call fair value gap, which is imbalance in the market, we can literally start to look for the buy. So let's see on the left if we have some kind of fair value gap. So you can see right here we have a nice little fair value gap looking like this, and you can see market perfectly actually respected from that fair value gap. So right now in the actual market we have step number 1, which is this one right here. We are going to paint it red. Then we have the correction. So we have huge push to the upside. After that we have correction to the downside, and then after that again we have another push to the upside before the actual third step, which is some kind of sell off and the whole manipulation of everything, which is going to be this one right here. And and it's just going to be dumped to the downside, and it's basically just a manipulation of all the sellers right here, of all the buyers right here, and basically a retest of some kind of imbalance in the market that we are going to react from, and from there on we are just going to look for buys. So right now, if I remove everything from the chart so it's clear, I'm going to just mark what's important, which is liquidity right here and this fair value gap right here. How are we actually going to enter the market? So we are going to actually enter the market off of the 1 hour time frame. So the confluences I just talked about, you can look for them on the 4 hour time frame and on the 1 hour time frame, but the entry for the swing model is a lot more times going to be on the 1 hour than the 4 hour, because the 1 hour is a lot more volatile to actually give us the kind of entry that I'm going to show you right now, which is that one candle roll that is actually going to make this so profitable. So right now we are scaling down to the 1 hour time frame, and let's see what the market did. So market swept this liquidity and basically tapped into this fair value gap. Our entry model is going to be based off of a fair value gap, so a imbalance in the market, but we are going to basically use reverse psychology on it. We are going to wait for the fair value gap to fail so we can enter the long position. So for example, right now, if we are looking for some kind of buys, we are going to mark the last fair value gap of this leg, and we are going to wait for that fair value gap to fail. And how do we know that fair value gap has failed? Basically, if we have some kind of closure like this, then it's still respecting, but if we actually get a close above like this, then we have to enter buy positions, because we know the market is no longer respecting these bearish fair value gaps to the downside, but it actually disrespected it and it's ready to reverse to the upside. So let's see what the market is going to do right here. So if you fast forward it, we are still waiting. So we just swept this liquidity once again, and after that you can see right here, first of all we have another fair value gap, so we are just going to move our entry to the downside and we are going to mark this new fair value gap that we have, basically mark it like this. We can see that this candle right here did not close above it, so this one did not do this, because then we would enter the trade, but this one just wicked above it and then returned back down. So we are still out of the markets and waiting. And what the next candle is going to do, as you saw, it basically managed to close perfectly above it. So what are we going to do? We are going to enter the market like this. We are going to put our stop loss below the body or the fair value gap. It's all up to you. I personally like to do it below the body. It is just way more secure and it's just going to stop us out a lot less times in the market. So what we are going to target is pretty simple and mechanical, and it is the thing that is actually going to make you be able to achieve that 85 to 90% win rate, and it is a basic 1-to-1 target. So a lot of people just don't like to target 1-to-1, because it's like, why would you target 1-to-1 when you can target 1-to-2 or 1-to-3 and then have 1 win payoff 3 losses? But when you have 85 to 90% win rate with a 1-to-1 strategy, there is just not going to be need for anything more to target, because you're going to win 8 or 9 out of 10 times in the market, and that is just going to be perfect for you on your psychology, and it's just going to be very easy to execute in the live markets. So let's see how did this trade play out actually. So you can see that instantly it just picked to the upside, and you can see it getting that one risk reward perfectly. And let's see where did this trade go in the end. So it pushed a little bit to the upside all the way until 1.65 risk reward and just returned. So imagine you targeting like 1-to-2 risk reward or 1-to-3 risk reward, and that is why I say that 1-to-1 is the most perfect target for these kind of trades. So just before we get on with another example, if you like the video till now, it will mean a lot to me if you're gonna leave the like and subscribe, so that YouTube actually understands that you like watching these kind of videos, and it is just always going to show them for you on your home page. So we are going to actually look at this one on the hourly time frame, so you can probably already see some kind of the things that we talked before, which is of course this push right here. If you want to mark it like this, we can paint it red. Then we can see this kind of correction right here, which was all the way till here. We can mark it, I don't know, green. And then we have this second small push that didn't go that far, because we are missing some fuel in the market, because we need to retrace, stop all of these people out, and then we can continue actually pushing to the downside. So let's see what the market is actually gonna do. So market actually swept this liquidity, and then market came up, retested this fair value gap right here that we basically made before. And what the market is gonna do right now is basically give us an entry model, and if it gives us an entry model, we are going to enter the trade. So just because we have these two fair value gaps so close to each other, look at this, if we manage to inverse this one, which we actually did, we are not gonna still enter the trade, because we have already tapped into the next fair value gap. So this is just a pure logic. So if we have two fair value gaps close to each other like this, and the market actually inverses the actual last one, and we already tapped into this one, we are going to want to see basically them both getting inverse. So if we wait for the market, you can see that this one would actually have lost, just because we haven't inversed both actually actually that we already tapped into, and then if we wait a little bit more for the second one, let's see what is gonna happen. So right here we have closed really nicely below it, and if we place our entry right here basically on the closure, where are we going to place our stop loss? I would personally not place it on the body like this, but I would place it on top of the fair value gap that we inversed. And basically let's see what the results are going to be if we target 1-to-1. Let's just wait and see, and you can just see us wicking to the downside, taking it and just returning back to the break even. And that's why I love targeting 1-to-1, because it is just in and out, and that's it. We take our profits and we are done for the day. And right now we are going to actually go to the scalp trade. So I'm actually going to show you how you can do this on the minutes. Okay, so market right here is actually very choppy, so it's gonna be a little harder to actually discover the bias or our direction that we are going to trade. But in the end, you always just look for where the market is stronger to. So you can see right here, market made a really hard push to the upside, and basically this is our, let's say, step number 1. Then it slowly retraced to the downside, and basically after this it just manipulated all of these lows right here. And after that you can see the main thing that is going to tell us that we are very bullish is this push to the upside. After all of these manipulations like right here, it is just going to tell us that we are so bullish. And then after that we can see that we had a slow retracement right here, which we can mark for yellow, I don't know. And then after that what we did is basically try to make another push to the upside. So this is our correction, as you can see. And then after that we can see that we tried to make a push to the upside, but there was just not enough liquidity or not enough fuel in the market. So what is market going to seek? Liquidity. So let's see what is liquidity on the chart. Liquidity is always going to be the bottom of correction move, and if you look on the chart, this is it right here. Also below liquidity, what do we have? We have this fair value gap right here. And what are we going to look right now in the market, since there is no fair value gaps on the 1 hour time frame? So there is no fair value gaps for us to enter right here. How are we going to enter the market? So since we are on the 1 hour time frame, we are going to scale down to the 5-minute time frame. And if you want to do it on the 1-minute time frame, you want to discover this kind of bias on the 15-minute time frame. So basically what I mean is you don't want to jump from, I don't know, daily time frame to the 1-minute time frame, but you actually gotta do it logically, because 1 hour time frame is going to always follow 5-minute time frame, but then the 1-minute time frame can be in totally different bias at that moment. So you always want to jump from 1 hour to 5-minute time frame. So since we are on the 1 hour, let's see what is on the 5-minute time frame. So this is right here the 5-minute time frame, and as you can see, this is probably the candle that took out the most liquidity in the market. So what we are going to do after that, we are going to look for the same thing that we look on the hourly time frame, except on the 5-minute time frame. So we are always going to look for that last fair value gap in the leg, which is this one right here, and we are just going to wait for it to get inverse to the upside. So let's wait. Is it going to happen? So here we just wicked inside it and then close down. So we always want to actually close above the fair value gap, not just wick above it. So let's see what is going to happen. So we are still pushing. Okay, so right now we did not inverse this fair value gap, but what we actually did in the market is we made a new fair value gap down here. So in the market we are always going to look for the new fair value gaps and always going to look for the new entry opportunities. So if we look at this fair value gap right here, you can see that we just beautifully right now inversed it. So if we enter the long position right here on the closure and put our stop loss below the body, as I learned you, this is very risky stop loss if you want to put it like this, and I always personally do it below the body at least. And now, because this is scalp strategy, you can always target bigger risk to rewards, because we know that market overall is going to go all the way to up there, but we don't want to target something huge. This is going to be something that you have to choose personally. You can still choose to target 1-to-1, which is going to be abnormally high win rate, and you can do that, of course. I do it a lot of the times in the market, but what you can do is get some kind of logical target, which can be some kind of high in the market like this one, or like this one right here, or this one up here. So it's all up to you, but of course as you target the higher risk to reward, your win rate is of course going to go down, because that's just the logic of the market. And let's say, I don't know, if you want to target this first one right here, which is almost 2 risk to reward, which is very decent. Let's see what is going to happen. So market beautifully came to it, then retraced. Let's see what is going to happen right now. Okay, so looks like the market took the second liquidity right here, second take profit, and then let's see if the market is going to run all the way up or actually reverse on us. So market actually ran all the way up here and all the way to this high up here. So if you wanted to target all this move, it will be just a huge profits in the market. But of course this is not going to happen every single time in the market, because a lot of the times you are going to get maybe second TP and then the market is going to reverse on you, which is just a normal thing. And just before you actually leave the video, I want to give you the whole playbook of everything you learned today in a PDF document. So if you want to claim it, of course, for completely free, all you need to do is go down there to the description and just claim it, and that's it. Also guys, if you learned something in this video, it would mean a lot to me if you can just like and subscribe, because that would just motivate me to keep uploading good stuff like this on the internet so everybody can see everything for completely free. And also one more thing that a lot of you may like is, if you want to actually learn from me personally one-on-one, there is still some spots in the actual mentorship. So if you want to check that out to see if you are a right fit for it, you can go down there and check it out. And yeah, that's basically it. I hope you enjoyed the video. I hope you learned something new, and I'm gonna see you in the next one. Peace.